Our first session is titled, How Can Egypt's Private Sector Drive Its Recovery? This discussion seeks to tackle the pressing need, now more than ever, for an enhanced role for the private sector in driving Egypt's economic growth. This session is presented in partnership with iScore. iScore is the Egyptian credit bureau that has been working since 2015 to increase the availability of credit to the Egyptian business community in close cooperation with the Central Bank of Egypt, the Financial Regulatory Authority, and the financial community. Not only does iScore avail the credit report and the credit score, it also works with private and public institutions to provide various products and services which assist the Egyptian government's strive towards digitization and financial inclusion. This session will be followed by a short Q&A, so I would like you to write down your questions during the discussions, and you will have paper and pens available if needed, provided by the ushers. Just make a show of hand. With a show of hand, they will be gladly provide you with paper and pens to write down your questions and hand it over to the ushers. Our participants joining us through Zoom are able also to participate in the provide their questions through the question and answer section during the talk. I would like now to invite Dr. Sherif Kamel, Dean of the AUC School of Business, to give his welcome address and to moderate our first session.
Thank you, Wafa, and good afternoon, everyone, distinguished guests, colleagues, friends, many of our alma mater, ladies and gentlemen. On behalf of the AUC School of Business, it's a sincere pleasure to welcome you back home here at the downtown campus, but also to the fourth edition of Business Forwards. This year's theme is Egypt resuming growth. We've gone through a bit of a hiccup, as much as any other country around the world, because of COVID-19. And throughout the next few sessions, we're going to discuss where to go from here. Obviously, a very warm welcome also to those joining us through digital platforms. As you can imagine, we have a number of COVID-19 related protocols. That's why we unfortunately had to limit the number of invitees in person, but hopefully in the near future this will be released, and we've seen already the worst of the pandemic. And I seize this opportunity and remind everybody to be well and stay safe. As Wafa indicated, we started the Business Forward platform back in 2017 as a knowledge hub, a portal, a platform where we can discuss with private sector experts, government officials, think tanks from Egypt, from industry, from academia, from around the world, issues related to the business environment and the economy. It is definitely an integral part of what we do at the business school. So we complement our internal ecosystem, not just through the academic degrees, but also through the activities we do on campus, but also in collaboration with different players in the market. And surely Business Forward has been one of the platforms over the past 4 years that actually invited different constituents to exchange ideas and deliberate where we can take the economy and the business environment forward. Just a very quick snapshot on the history over the last 4 years. So the very first annual event was in this, it's always in December, by the way. It was in December 2018, and during that time, Egypt was just almost just past halfway of implementing the 3-year economic reform program supported by the IMF. So the focus back then was on the economy at large, on how to push it on a more sustainable path, but also improving economic stability, macroeconomic indicators, and enhancing socio-economic conditions. In 2019, the focus was back then on what's after the economic reforms. looking forward, the role of the private sector, how to unleash the potential that is out there to support the economic empowerment of the different constituents in Egypt, and how to accelerate and scale up job creation and economic prosperity. Obviously, the discussions in 2019 were building on the first generation reforms introduced in 2016-19, but also how to help support the private sector to become more agile, more competitive, and provide the enabling environment for them to be the engine of growth of the economy. In 2020, we all know the story. Like any other country around the world, it was all about COVID, the implications of COVID, and how we not just sustain and mitigate the risks, but also come at the end of the other side of COVID-19 with turning some of the crises into opportunities. And I truly believe, and I believe the video alluded to that, one of the elements that can help with that is digital transformation. Today, 2021, I personally believe that Egypt has an evolving economic story. And surely the full potential is there and yet to be unleashed. But it is also important to realize that transforming an economy into a growing and sustainable path is a journey. It is not a destination. And such journey goes through several phases, and each phase includes challenges and opportunities. And therefore, it needs a conducive and support environment strengthened with the appropriate and adapted policies and regulations for it to grow and to prosper. Earlier this year, in April, the government announced its reform. I think it's dubbed as 2.0, and called the National Structural Reform Program, focusing on sustainable growth and an eye on key sectors of the economy, but also investing in infrastructure, not only in the cities, but also in rural areas and more or less underprivileged communities, but also investing in people, the human capital, not just through degrees, but also through vocational training and educational and technical education, but also investing in the direction of the green economy. One of the pillars is increasing the role of the private sector in the economy. So we decided that in 2021, looking into how Egypt's private sector can drive that recovery, and not just recovery, in my mind, that growth and prosperity. So with that, it is my sincere pleasure to welcome the panelists on stage of the first panel. And I would like to invite Tarek Tawfik, the president of the American Chamber of Commerce in Egypt, Dr. Saeed Bakhache is the senior resident representative of the International Monetary Fund in Egypt, and Dr. Gehan Saleh, economic advisor to the Prime Minister. Please come on stage. All right, our first panel of the day focuses on how can Egypt's private sector drive its recovery. Over the last few months, there has been a number of developments that reflects the government's direction in promoting a more inclusive private sector growth. The panel today will share perspectives from the private sector, obviously international financial institution, but also the government. So what has been going on? What is the thought process? How and what are the plans of the government to encourage and enable an environment for the private sector to actually, and again, it's a term that has been used repeatedly, unleash the potential of the private sector. The privatization program, the thought process behind it, where it's going, it has not been a secret that over the past several years, FDI outside the oil and gas industry eluded Egypt. What can be done to encourage that? And surely the prospects of digital transformation and the digitalization of many services. And with that, digitalization should be looked at as, again, an enabler environment, not just to use technology, but to hit on some of the issues that I think were derailing the economy, including bureaucracy, red tape, inefficiencies. A digitalized environment is not automation, is not really converting processes into becoming automated. Otherwise, we'll have inefficient processes becoming automated inefficient processes. But it's looking at the entire environment in a different way. And it is my pleasure today to welcome three esteemed panelists, and I'm going to introduce them fairly quickly to get on with our conversation. To my immediate left, Tarek Tawfik is, as I said, the president of the American Chamber of Commerce in Egypt. He's also the chairman of the Cairo Poultry Group, and the vice chairman of the Federation of Egyptian Industries, and the deputy chairman of the Egyptian Center for Economic Studies. Tawfik is a board member of the General Authority of Investments and Free Zones, GAFI, Egypt's Sovereign Wealth Fund, which will be a topic of our conversation today, Egyptian Countryside Development Company, and the Egyptian Food Safety Authority, and the Agriculture Bank of Egypt. He holds a bachelor's degree in civil engineering from Cairo University, a master's degree in engineering from California Polytechnic State University, and an MBA from San Francisco State University. To his left, Dr. Gehan Saleh, economic advisor to the Prime Minister. Dr. Saleh is a professor of financial economics and international business. She is a board member of the Egyptian Stock Exchange, Ayadi Investment Holding, and Egypt Ventures. She is the former dean of the College of International Transport and Logistics at the Arab Academy of Science and Technology, and former board member of the Egyptian Holding Company of Food Processing. Dr. Saleh worked as an economic consultant for the Federation of Egyptian Chambers of Commerce, the Ministry of Internal Trade and Supply Chain, and the Ministry of Transportation. She holds a PhD and a master's degree in economics and finance from the University of Illinois, and a Master of Arts in International Development Economics from the American University in Cairo. So again, welcome back home. On my far left, Dr. Saeed Bakhache, the Senior Resident Representative of the International Monetary Fund in Egypt. He previously was Mission Chief for Chad and Deputy Vision Chief in the African Department, where he covered Central African regional economic issues. Prior to that, he was Deputy Division Chief in the Debt Policy Division in the Strategy, Policy and Review Department. Before joining the fund staff, he served as Senior Advisor to the Middle East Executive Director on the Executive Board of the IMF. Dr. Bakhache worked across a range of issues, including debt sustainability for advanced, emerging, and low-income countries. He managed and reformed the IMF debt sustainability frameworks, wrote on the sovereign bank nexus, and worked on exchange rate and currency union issues. He has a long experience in the design and implementation of economic adjustments and reform programs. Dr. Bakhache holds a PhD in economics from the University of Maryland. So without further ado, let's just kick the conversation with Tarek and what is going on from the private sector point of view.
Thank you, Dr. Sherif. I mean, I'm talking from a perception of the private sector, primarily. Let's admit it, we have a good story to tell. I mean, Egypt has been going through a remarkable, reform program, stabilizing the economy, the macroeconomics, I think weathered the storm of COVID at, by far better than many other countries, and I think the presentation that just preceded our panel showed a lot of this progress in this direction, However, there are still challenges, FDI is not coming to the country. Private sector, is shrinking. PMI, which is the Purchase Manager Index, has been below 50 over the last 6-7 years. It's an indication that we're not growing as fast as we want, The pillars of our economy are still volatile, I mean, we depend on tourism, on remittances, on hot money, Suez Canal revenue, energy prices up and down, and again, when a crisis hits, immediately It impacts a country like Egypt, a developing country, and by and large, when COVID hit, we had to go back to the IMF and we had to increase our debt. And this can happen any minute, We're facing a crisis right now in supply chain, inflation, and at the end of the day, when we look at the bond yields in the United States or the easing off of their program, this can lead to emerging markets losing a lot of volatile money or carry-on trade, going back to its origins. Again, it would impact a country like Egypt. Unless we go and we have a sustainable model for our economy, like foreign direct investments, exports, increase in industrial capacity by and large, I believe that this vulnerability will remain. There is a realization by the government, that something has to be done. But let me go through some indicators, I mean, in 2020, only 32% of available credit went to the private sector, as opposed to 64% in 2007. It just shows you that the role of the private sector is shrinking. And by the way, all the data I'm going to be sharing with you is derived from presentations and from reports by international institutions, So, I mean, I'm not making it up by any means. Again, there is a recognition, by the Ministry of Finance declaring that next year, they would want to see the private sector contribution of investment increase from 40% to 50%. That was well in the vicinity of 65% in the 2000s. So this is, an anomaly that needs to be resolved. Definitely there was a role for the government to interfere over the last 7 years in view of the crisis that we've been going through. But now I think, we have come to a point that we need to revise our approach, and make sure that the private sector is the leading investors. Our economy is still, to a great extent, 70% driven by the private sector. As opposed, 50% of which is informal economy. So I mean, formalization is one challenge, and again, at the end of the day, triggering the private sector to invest more hasn't been taking off recently. The growth rate that has been triggered by the government, our entire growth rate has been triggered by public investment. Public investment, accordingly, is generating jobs, in sectors with low skill. It has been sustainable for a while, but if we want to leap forward in the coming period, we have to change our trajectory and our policy. Can we change yes. Now, so what needs to happen? There is finally a realization by the government, and we have to take the further word, that there is a program being developed as we speak today for a gradual exit for state-owned enterprises from the economy. Bear in mind that the government, CAPMAS had this, statistically speaking, the government is present in 45 production sectors out of 53 or 54 production sectors at large, losing money on 42 out of the 45 sectors that they are in. Last year, we read in the news that the government agencies or government projects lost 147 billion Egyptian pounds. Why? This is a big question mark, and it needs to be reversed. So, I mean, the gradual exit of SOEs from the economy, as going to be outlaid by the government, is becoming a necessity. It's not a luxury. The other turning point, is conceptually speaking, government would manage their investments, not manage the sectors. Once this is declared, this could be a game changer. The government has a role to invest in the economy, but managing the money, like for example in the tourism, you have the Marriotts, the Four Seasons, or you name it, the assets are owned by the government, yet, who's managing it? This concept, has to prevail, and I think there is a realization finally that this has to be the way forward. There is resistance, of course, from different government circles, but I think if there is a political will, this can be a big game changer. Addressing red tape. Red tape, is a killer here in this country. When we talk about land allocations, private licensing, permits, it's a nightmare. Federation of Industries have dissected all sectoral impediments, by which, and it's, unless we identify these impediments and red tape, we're not going to be able to move forward. Some of the major challenges as we speak, is basically the tax code, the traffic across borders, These are stumbling blocks, that is choking investors in the country and choking, private, foreign direct investments to come in the country. Dialogue, public-private dialogue is becoming instrumental, and I have to admit there has been a very close dialogue over the last year or so with clear results. There is a panel, that is the Prime Minister declared that there is a reform program, and he is heading a committee to follow up on this reform, and there are subcommittees that are catering to this panel, out of which the private sector is engaged in every one of them. So I think this is, again, a game changer or a turning point on having the private sector present in the decision-making process on how to reform the red tape and how to reform the economy. It's a good step forward, Can we change, please, the slide? Well, anyway, it's, well, okay. To increase FDIs, I just want to give you an idea. Entire exports from Egypt are $30 billion, give or take. Vietnam, which is a similar country in the same stage of development, is exporting for $300 billion US dollars. They export in 1 month what we export in an entire year. Some things, and they're a communist country. I'm not talking about a liberal private sector oriented setup. And in this respect, you read in the news the other day that Lego is investing $1 billion in a Lego factory in Vietnam. Where are we? Why isn't it coming over here? I mean, all the impediments that I mentioned earlier are a case in point whereby a lot of commerce who come to Egypt with potential investors come and leave. Of course, I mean, we are, what I'm saying, does not underscore the achievement that's happening in this country, but we are not anywhere close to the potential of this country. Skill level is a challenge as we speak, I mean, we have to adjust our labor laws to bring in all necessary skills, to support investments, to support FDIs. Unless we bring skills from abroad that will help us train and retrain our labor over here, still our labor skill level are extremely low as opposed to other countries like in China or like in Vietnam, and this is one issue that needs to be addressed clearly. The one other thing I would like to mention, Sherif, tell me when I have to quit, Government should exit from what they call wasted futures. The government should not invest in industries that are mature, that are saturated, that has no future, like textiles, like food industries, agriculture, simple electronics, white goods. This is not the role of the government. This is where the word crowding out comes in. When you start getting into these saturated markets where the skill level of the private sector is there, this is not a good sign. Government should be investing in future economy, future industries, to pave the way for the private sector and to carry through. This is a very normal approach, that is being exercised even in the Western countries. The government in the United States has a big role to enhance private investment, and this should be the role rather than to go in and do the same job that the private sector is doing. Again, finally, there is a realization, of having state-owned enterprises go into the stock market, But I think, this is one thing. We have seen the good first signs. There is the e-finance that has been in the stock market last month. There are another 6 other companies that will be spun off in the first 6 months of next year. I think we need to have a more accelerated program in this respect to give a positive sign for investors. The whole idea, once the government adopts this exit approach, and a clear definition of which industries they will stay in and which industries they will move out on a gradual basis, this is an invitation for FDI and for private investors to come in. Clarity and transparency is needed. In the past period, there was no clarity, and a lot of investments, has been shying out in fear of a perception that the government is crowding out on an unfair basis. This perception should be cleared with the declaration of this clarity by identifying every sector. One last point also I'd like to mention, that the pillars that are supporting our monetary policy are still very volatile. And I have to admit, during a visit to the United States last month, for the first time I hear that there is a perception from potential investors that our Egyptian pound is overpriced. This perception has not been there. I'm not saying it's right, it's wrong, you know, but the perception is starting to prevail, you know, with potential investors. Having said that, I think I'll leave it right there, and I think, you know, that hopefully that year 22 will be a revealing year. We will see whether we will take the government on its word on this reform agenda or not, you know. So seeing is believing. Let's hope, you know, they carry on and they do what they should do. Thank you.
Thank you, Tarek. Thank you, Tarek. You've covered a lot of ground, and we'll be back and address some of those issues. But I stop on 2 points that Tarek mentioned. I think they are the crux of the matter, because there has been steps that has been taken by the government for a more supported and inclusive private sector. Yet the 2 words that Tarek mentioned is clarity and transparency. And I think these are 2 key points, and we'll come back to them. So we've heard from the private sector, someone who's worked in the private sector for many years, engaged in different sectors in the economy. Let's move and listen from the IFIs. Dr. Bakhache, what's going on? IMF has been a partner with the Egyptian government, not just in the more famous 1619 program, but also even during COVID, there was a support close to $8 billion to the government to address different issues, including social inclusion, supporting the private sector. What's your thoughts? Sure, please.
Be controlled by colleagues over there. So again, great to see you, Dr. Sherif. Great to be on this panel and to contribute to this discussion with Mr. Tarek, Dr. Gehan. I think the issue for discussion today is quite topical and quite timely, and indeed I think there is a clear appreciation really and understanding that strengthening the role of the private sector is key for the Egyptian economy to expand its potential, but also for the Egyptian economy to generate more employment to keep up with the growing population. And this is a very important reason why we think that it is the private sector needs to be strengthened. What I would like to do in this session really is to focus in particular on what we think is a key impediment to private sector development. It's not the only impediment, but it's a key impediment, which is the extensive role of the state in the Egyptian economy. So if we can move the slide, please. Yes. So this slide has the main messages. What I will do is to explore really the challenges faced by the private sector because of the extensive role of the state, and then we'll conclude with some policy recommendations. The bottom line is that we think that when the private sector is provided with the adequate regulatory environment, with a stable macro environment, and with a level playing field, the private sector can flourish, it can create high-quality jobs, and it can contribute to expanding the potential of the Egyptian economy. So I mentioned here the main policy recommendations, and I think it's good to start with them. I think obviously I represent the IMF, so macro stability is, we have a strong conviction that macro stability is an absolutely necessary condition for encouraging activity in the Egyptian economy. But also there is a need to reconsider the role of the state in the economy. And the objective here is to really create more space for the private sector to freely operate and produce goods and services. So this is one. The second is to strengthen really the performance and the governance really of state-owned enterprises, so that there is better accountability and better competition practices amongst all economic agents in the economy. Now, of course, we know that state-owned enterprises benefit from advantages. It's very important to eliminate and minimize these advantages so that the entire economic landscape can compete on the same level. So let me take a step back and tell you why, give you a little bit of a context, why the private sector needs to be strengthened. Obviously, since 2016, we've seen a significant, really a considerable improvement on the macro front, and this has allowed the Egyptian economy to recover. And we see that in the second half of the last decade, we've seen a good economic performance, a good economic growth, good employment outcomes, and even during the COVID crisis, we've seen the Egyptian economy continue to grow when the rest of the world really was in recessions and sometimes in severe recessions. Now, clearly this is not enough, and I mentioned already the growing population. If you look at the chart to the right, you see that the size of the working age population in Egypt will increase by 30% over the next 20 years. This is a tremendous increase, and therefore it is important to create jobs, and when I talk about jobs, we're talking about high quality jobs, sustainable jobs, to absorb and leverage really this potentially strength of the Egyptian economy. So the bottom line that I need to say is that the private sector needs to be incentivized to kind of operate and develop. Unfortunately, so far, if we've seen, next slide please, if we look at private investment and actually exports, we see that they have contributed very little to economic growth in Egypt. And here we have, in these two charts, the idea is to compare Egypt, in line with what Mr. Tarek said, compare Egypt with other kind of well-performing and high countries that are experiencing high growth. And you see that for Egypt, in fact, if you look at the left chart, the blue part of the first bar, sorry, the green part, private investment, contributes very little to growth in Egypt. And while this chart shows 2010 to 2019, if we go back before 2010, the same story prevails. Private sector, private investment contributes little to growth. And in fact, growth is driven a lot more by consumption than anything else. When we look at net exports, the picture is even worse, really, and we see that net exports is a drag on the Egyptian economy. Now, the second chart on the other part of the slide, it's more striking in the sense that it gives the same picture, but looking at per capita growth rather than overall growth. And you see that Egypt, compared to other countries, has some long way to go to allow private investment and exports to contribute to per capita growth. So the question is why the private sector is not flourishing. One significant, next slide please, one significant, can we change the slide please? Yeah, thank you. So this slide really tells the story of state-owned enterprises and the role of the state in the economy. Very much to build on what was said earlier, there's a very large number of state-owned enterprises in Egypt, and they operate under various and complex institutional frameworks. And they are spread across many ministries. So not only there are a lot of state-owned enterprises, but they also operate under an institutionally complex framework. Now, more important really than the number of state-owned enterprises is the extent to which the state is involved in almost all sectors of the economy. And let me say that if we look at a typical emerging market, it is not strange, actually it's fairly usual to see the state involved in an airline, in public bank, public utilities, but it's really not usual for a state to be involved in the production of tobacco, food, appliances, textile, you mentioned textile, Mr. Tariq, hotels, even baby formula. So this is an indication that the state is really involved in so many sectors. Now, why is that a problem? There are many aspects to this question, but the main underlying problem is that SOEs are not subject to the same disciplining factors that guide private companies. When a private company does poorly, it shuts down, it goes bankrupt, and the resources that the company has can go elsewhere to be used more productively. When, for a state-owned enterprise, their activities and their performance is protected by the state through bailouts, through transfers, and therefore they continue to use assets or means of production inefficiently. This is really at the cost of taxpayers. This is at the cost of scarce capital. You know, capital is not plentiful and therefore should be used as efficiently as possible. Next slide, please. So, in addition to the fact that all SOEs are implicitly backed by the government, and this is why they are sheltered from poor performance, the SOEs enjoy many advantages. One, by virtue of being state-owned enterprises, they are much better at navigating the institutional complexities of the landscape. They do have better access to land. They have easier access to credit with government guarantees. Also, the procurement laws do not apply. Government procurement laws do not apply to SOEs like they apply to the private sector, and therefore the exceptions that exist at the procurement law allow or lead really to some private sector participants, or many, to be crowded out of the competition for business. Also, there are many other exceptions related to antitrust measures. Many companies are exempted from antitrust measures. There are income exemptions, real estate income tax exemptions, real estate tax exemptions for military-owned establishments and commercial facilities. So, in sum, the playing field is far from being leveled across all economic agents, and therefore this discourages private investors domestically, but perhaps even more so foreign direct investment. We were talking about foreign direct investment a little while ago. Next slide, please. So now, in spite of all these advantages, actually, if we look at the performance of SOEs, we see that the performance is poor, and could be quite poor, actually. You mentioned, Mr. Tarek, the textile industry. Now, in this chart, the way to look at this chart is to actually see that the bars to the left of the zero line means that the Egyptian SOEs perform worse than their international counterparts and their Egyptian counterparts in the same industry. So you could see a lot more bars to the left than to the right. And in fact, the ones to the right, you know, they're generally monopolies or natural monopolies, or they benefit from captive markets. To the left, you see the textile, you see automobile, etc. For instance, I just want to give you an example. Textile SOEs experienced an average return on assets of -22%, compared to a profitability of 0.4 for their international counterparts and 5% positive for private sector firms in Egypt. What this means is that there is a depletion of assets, because this 22% is basically a depletion of assets. It's drawing on scarce assets and capital. So again, for this slide, actually, I'm not going to go through it just in the interest of time, but basically it tells the same story, looking at a different indicator, not return on assets, rather this is a productivity or revenues per worker. And again, you see that across the board there is maybe a couple of exceptions where state-owned enterprises perform poorly relative to their private sector peers. Now, the problem, again, next slide please, is that this poor performance has a real cost. So if I like this slide because it illustrates what that means. If we look at the kind of poor performing SOEs, and if these SOEs perform at the average level of an international SOE, you will see a turnaround in their performance from about -7 loss to a 12 billion profit. This is a 20 billion turnaround in the performance of SOEs. This is the budget of Takaful and Karama, for a little bit of context. This is very big. And of course, this comes from, bailouts, tax, taxpayers are paying for this cost. And of course, the problem is that for the economy as a whole, this means, again, resources being taken away from the private sector to SOEs. So what should be done? And this will be my last slide. Next slide, please. This is perhaps it puts a bit of an accent on many of the points that Mr. Tarek made. So first, we think that it is incredibly important to define a state ownership policy. And the idea here is to give a framework to guide the private sector and the public sector in engaging in economic activity. So it's very important to identify sectors where there's a reason for the government to be involved, strategic reasons or market failures. In sectors where this is not the case, it's important for the state to withdraw, to gradually withdraw through whatever means that the government sees fit. And in doing so, you would encourage the private sector to kind of invest in those industries or those sectors where the government is staying out. Also, it is very important to kind of centralize the ownership of state-owned enterprises and to unify and simplify the legal framework governing these SOEs. Now, the second, the middle of the slide is about strengthening transparency and performance of SOEs. Now, here, I think, I should point out that the reform of Law 203 has been a very encouraging and very good step in this direction, and it's very important to kind of build on what has been done to hold SOEs to the highest standard of transparency, comparable to really what publicly listed companies do. It's very important to continue to expand financial reporting of state-owned enterprises, and even though this is not mentioned on the slide, it's very important to monitor the fiscal risks arising from state-owned enterprises and publish these risks. We need to incentivize the private sector, the state-owned enterprises to perform well through, there are several means to do this, but this is really very important to do. Of course, there's a lot of merit in publishing or making it known, making the governance of these SOEs known publicly, including executive boards, how they are compensated, how they are chosen, etc. Now, the last part is leveling the playing field. I can talk for hours about this, but the bottom line is that really SOEs and private sector should be treated the same. It's very important to eliminate preferential treatment or exemptions that are given to state-owned enterprises. The role of direct procurement between public agencies should be really limited, minimized to the extent possible, and also the exemptions from the antitrust laws also should be very clearly defined. It is defined currently, but it's very loosely defined. So it needs to be tightened. Of course, public banks should deal with SOEs at an arm's length. And we often hear about regulators and market players being the same, and there should be an independence between the regulator and market players. So a lot to be done, but very important to do to empower the private sector. Dr. Sherif, I need to talk about macroeconomic issues in less than 2 minutes, in fact, and to say that, yes, this is absolutely important, but I want to remind also that the private sector needs macroeconomic stability to be sustained. It's very important to stay the course of disciplined monetary and fiscal policy. The government, the authorities have done a great job in recent years at balancing the different considerations and implementing disciplined policies. It's very important to continue that, to put debt back on a downward path. You may have seen that public debt increase expectedly so during the COVID crisis. It's very important to put it back on a declining trajectory, and to ensure that monetary policy continues to be anchored on price stability, on the inflation target regime, with a flexible exchange rate to absorb shocks really, and ensure that the Egyptian economy continues to be competitive. I thank you very much.
Thank you very much. Again, from the IFI's perspective, I believe you both are in line. Clarity, transparency, deciding on the policies that would more or less guide the state-owned enterprises. And I think the keyword here was a level playing field, with all the discrepancies of the advantages given to SOEs in many different ways that are directly impediments for the private sector to flourish. You've also touched upon an extremely important point against the perception that we have an issue with the imports in Egypt. Actually, we have an issue with exports. And I think that that is a key point that is way, way below par where Egypt should be. I also liked very much when you said more space for the private sector. So it's not just a level playing field, but a breather for the private sector. And you've covered a lot of other points, but I want to move to the third angle of the equation. And I truly and firmly believe that the objective is the same. Whatever Dr. Bakhache and Tarek said is not news to the government. The government is taking the steps to try to tackle that. But as we sometimes joke about it formally and informally, this is a 5,000 years country. And if we did not invent bureaucracy, I promise you, we mastered it amongst the best, with all the negativity that comes with it. So the silos, the thinking vertically as opposed to horizontally, sometimes seeing the big picture. I'll conclude by saying the investment file cannot be more strategically positioned than landing on the Prime Minister's office. So what is missing? What is missing in the jigsaw puzzle? I want to pass the floor to Dr. Gehan to share her thoughts. And I remind you, please keep your questions coming. I already received a few, but I look forward for more. Dr. Gehan.
Thank you very much, Dr. Sherif, for the invitation and for the opportunity to talk here today. Actually, this is a very important event that I'm really glad that I'm attending to speak. The timing is very important as well, because very soon we are going to have clear answers to all the questions and queries that have been raised here. And personally also, it gives me a great pleasure to be here at AUC, my home school. It feels very good, again, to be back to Ewart Hall, where I stayed most of my time when I was undergraduate and graduate, so it's really a great pleasure. Going back to the topic, actually the topic is really important, and the enhancement of the private sector is not a luxury, it is crucial. And the three speakers and everyone I think in the room agrees upon that. But I would like just to start talking about, I won't say a history of the economy, but let's go through what happened in our economy till 2016 with the economic reform program and then the steps after that. Now, Mr. Tarek mentioned the private sector percentage of investment in 2007-2008 was about 70% of GDP. Yes, for sure, and we are so proud of that. And then at that time, in absolute terms, that was not huge because, yes, it was a percentage of the GDP, but in terms of absolute terms, it was not that big. Then actually, the public investment or the government investment was not that large. And then 2010, we found that not only 2010, but even before that, that the services were declining. We have a very vulnerable energy, roads, electricity, and then 2011 we had the revolution. People were not happy with the services they provided. They were not happy with the welfare level that Egypt actually was experiencing, and there's the voice of the people that they need better life, they need better infrastructure, we need electricity, we need transportation, we need energy, and so on. And these sectors, for sure, they are sectors that the government has to invest in. I mean, they're not sectors for, to start with. 2011, there was a political risk. So after the revolution, we couldn't wait for the private sector to come and invest in the infrastructure or to come and invest in electricity or the roads and so on, because we had political instability, and Egypt started to rank high in political instability at that time. So waiting for the private sector to invest in these sectors was not going to take us where we want. So the government has to step in and to put heavy investment in these sectors to start to raise the level of the services and to pave the road for the private sector to be in. Then, as you know, in 2014, we started to have another kind of restructuring for the political environment. And again, if we stop at that time and ask the private sector or ask the foreign direct investment to come, we have a risky business environment, we have unstable politically environment. So for sure, rational investors would wait till they see stability and then they come and invest. And there is a huge opportunity cost to leave the country without this investment in order to stabilize the economy again and stabilize the country again and then open the road or pave the way again for the private sector. Then we come 2016, where we started this strong, aggressive economic reform program. And let me say it was a financial monetary reform program, and it started with the floating of the currency that led to a depreciation in the Egyptian pound that was really hard on the businesses and on the people as well. Inflation was very high. And we took those tough steps. And actually, people also, they bared with us those tough steps. Now, we made high growth rates, and it was a successful program, but we understand that actually such growth and such reform is not going to be sustainable. The financial and monetary reform that has been done was really good, but it needs to be completed. It needs another part of reform, which is the structural reform program. And we had so many reform programs. By the way, it was not the first economic reform program. Egypt had so many economic reform programs, and it did well, but then it stopped in the middle, and it did not continue, so we went back again to the decline. For that economic reform program 2016, no, we wanted to continue the program. So recently, last year, we announced the second wave of the economic reform program, which is the structural reform. And the structural reform, we're looking at the structure of the economy. We're looking at making the growth inclusive. We're looking at making that development sustainable, and we want that to continue. To do so, we made like diagnostic analysis for the economy to look at the main sectors contributing to the GDP of the economy. And we identified the main sectors that should be the key player for the economy in the coming year based on the competitiveness of the economy and based on the resources of the economy. So we identified so many sectors. On top of them, we have the three main sectors that are supposed to be the leading sectors for the growth from now on. The ICT sector, and it's not by a chance that we have seen that the ICT sector during the last period made that growth. Industry, for sure, industry is a base for the development and the growth, and agriculture. So these are the main three sectors actually that we have identified through the economic reform program to make the structural change. In addition to that, we have realized in the structural reform program that there are some pillars that have to be there in the economy to sustain the growth. Now, these pillars, number one, is the labor market. We have a huge market. We have young population, but we have a weak labor market. So that's really needed to be changed. We have a big structural change in the labor market to make the labor market, our labor market, a strong labor market. Of course, that has to do with training, with education, with providing decent jobs, as we mentioned, especially that we have a growth rate of population that increases the country by around 2 million a year, right? So Egypt every year has another small country beside it. We have another country like the size of Lebanon beside Egypt every year that we need to provide education, healthcare, jobs, and so on. So again, we have to have a sustainable economy that produces these jobs. This is definitely not going to be done by only the investment of the government. And here we come, the second pillar for the structural reform program, which is the enhancement of the private sector. So the second wave of the economic reform program, which is the structural reform, the core of it is the enhancement of the private sector, the enhancement of the investment of the private sector to lead the growth in the coming period. Now, the investments out of GDP was about 15% of GDP, which is not satisfactory at all for us. We want that to be 25% of the GDP, or the sources of growth of GDP. We want 25% to come from investment, unlike the other countries where they are based on consumption, because we're not yet the high consumption economies like the United States or the big economies to rely on consumption, because we don't have high GDP per capita, and definitely consumption is based on the GDP per capita. So first of all, we need to have a source of growth that is sustainable like investment. Now, to reach the 25% investment as a contribution to the GDP is never going to come from the government. For sure, the private sector is very important, and the foreign direct investment also is very important. Okay, so to invite the private sector to participate and to increase this percentage as an investment or part of investment of the GDP, then we have to look at what are the challenges that are facing the private sector to make them contribute to reach the 25% that we want right now. Now, this for sure, part of it are right now instant problems that are facing the private sector. We are working on that, looking at the access of finance, looking at the prices of energy, the access to land, the tax reforms, the investment law, all these ecosystem that is required for the businesses to participate in investment and to expect the profit that are really important, we are working on them. Others, I said this is like the instant that we have to fix, because these are the challenges that are facing the private sector. The other is the vision of the investment of the government or of the country. And that actually, again, requires a lot of collaboration and a lot of work. The private sector is always working with the government and invited to participate in the discussion and the brainstorming about what is the vision. The international institutes are also with the government, are working and designing that. And I'm very glad when I heard Mr. Tarek and Dr. Saeed that their views actually, they're complementing what the government is doing. And this is not by chance, because we're working with the private sector and with the international institutes as well. Now, what is the next step? As you have just mentioned, the next step is announcing the sectors that the government is going to step out of them to leave them totally for the private sector. And that's going to be very soon. Again, there is this study, the last economic committee that was held at the cabinet. We discussed a preliminary document about the private sector enhancement and the empowerment of the private sector, the state-role enterprises, the crowding in and the crowding out. And we want to come up very soon with the sectors that the government is going to step out in the short run, in the medium run, and in the long run. And that's going to be very clear and very announced, and the way of getting out as well. In addition to that, the playing field and the competition and the fair competition. And as you know, we're very happy that we have a competition law. We're revisiting the competition law, and we have the Egyptian Competition Authority. That is one of the important institutes that we're very proud that it's independent of the government, and it's always looking at the playing field and looking at the cases where there might be some sort of monopoly. Providing we're started again, as you know, with the IPO program. Yes, there has been a delay because the COVID, as you know, was not giving the right chance for the IPOs, where investments and investors were a little bit scared of making the investment. So the investment banking told us the last 2 years it is not the right time. But recently, thank God, e-finance, and last week on Thursday we had Abu Kir for Abu Asmida was also launched, and we have a committee for the IPOs that actually announced that we're going to have another companies for the coming financial year that are going to be in the private sector. We have the sovereign funds, and again, we're so proud with the sovereign fund, and it's doing a great job actually engaging the private sector. And I guess you have read about the Tahrir building that has been actually there is a consortium, an American consortium, that is going to work with the sovereign fund to transform this iconic building into a big iconic place again, making it a hotel with the business offices and so on. Other also properties of the government, we want to maximize their value by using the sovereign fund to have such consortiums to enlarge and to engage the private sector as well. So transparency, I totally agree. There's going to be this transparency governance for sure. This is going to be announced exactly. But what I'm really confident about is that we are on the right track, because both the international institutions and the private sector, this was their view, this was their perception, and this is the requirement. And through our studies and engagement with both sides, we have formulated this document and this doctrine actually that is going to be announced very soon. One last point that I would like to mention to leave space for the discussion and questions is about the experts. Definitely experts are very important, and definitely experts are not satisfactory at all. No, I mean 30 billion is not up to the extent or the appetite of the Egyptians. But again, and we have a direction from the president that we want the experts to jump to 100 billion instead of 30 billion. Now, to do so, exports are excess production, right? So we have to increase production first in order to be competitive to export. And that has to do with the industry and the problems that are facing industry. We won't be able to export without fixing the industry first. We have to fix the industry, the challenges that are facing the industry, and then after that we can export, because we won't be able, we want to export, but no one will import if the products are not competitive. And in order for the product to be competitive, then we have to work on the production structure, we have to work on the cost and reducing the cost and increasing the quality as well, looking at the challenges. And again, this is what we're doing. Whether we're talking about exports to Africa or to Europe or to the region, or looking at the location of Egypt, which is beautiful as a hub and so on, still there are some work, the preconditions that have to be done before we go to the experts. For sure, Vietnam is an example that we're looking at. But again, Vietnam is making all that exports with imports as well. And by the way, I'm not skeptical at all about imports, as long as we're being able to cover the imports, because sometimes talking about the value chain, it is not a matter of what I export or what I import, but we want to be on the value chain of the world. Now, to position ourselves on the value chain so we can have strategic alliances or FDI and so on, that has to start from fixing these production structures and the ecosystem as well. Again, imports, we can be worried about the trade balance, but again, if we I'm not with cutting imports, but I'm with increasing the sources of the foreign currency and exports, FDI, tourism, the Suez Canal, rather than just cutting the imports, because cutting imports means that we're reducing competition with the rest of the world. And actually, again, we are on the consumer that is receiving many products all over the world to look at the competition and pick whatever they believe it matches their taste and it matches their income. So, and most of the time, imports actually in Egypt, they are inelastic, because we're talking about imports of basic food items, imports of intermediate goods, imports of medicine. So we cannot just talk about let's cut imports and then production is going to stop, or let's cut imports and then we have a problem of a higher cost of production because of cutting imports. But we have to look at localization, and I believe in localization and looking at the industry and how we can localize the inputs for the industry, and that won't happen without, first of all, again, fixing the ecosystem itself and the business environment. So when we have the FDIs, they bring with themselves the feeding industries. We're working on the automotive strategy, for example, and we think that Egypt could be a hub for automotive industry in the coming era. And we don't want only to look at just building the car, but we want the feeding industry for this automotive industry that will bring so many companies and so many investments to, again, station in Egypt to make that production. Not only to produce for Egypt, but also to export for Africa, for the Middle East, for the Arab, and even for Europe with the free trade agreements that we have with our neighbors. So all that view and vision for the economy requires a lot of work that we are working on. A private sector is a crucial part and has been, and it will be a crucial part. Again, on the short run, we are going to announce the sectors that the government is going to step out of them, so we can make them just for the private sector. But what I'm talking about now, that the private sector, I just remember that, for example, Hayat Karima that we have seen in the presentation, which is an initiative from the presidency, was a very good example for crowding in, not for crowding out, because all the infrastructure that is being done in this initiative, we have crowding in from the private sector, actually getting into the water sanitation, for example, into the making the infrastructure as well for these villages. So that was a source for business and jobs for the private sector during the era of the COVID, where the foreign direct investment was weak and was not able to come to the country. I think I'll stop here to allow for questions. Thank you very much, and I'll be waiting for the questions.
So now I think we've heard from our three speakers, the different perspective from the private sector, IFIs, and the government. And in many ways, I get the sense that the issues are known, they are clear. The initiatives are there, the discussions are happening, maybe behind closed doors, and some of the plans are already out. I think the next step is to see those discussions and initiatives realized on the ground. And I think many of the questions coming here are actually covering probably 2-3 points only. I can tell you that probably 4 or 5 questions are addressing the issue of FDI again, and some of the questions actually were addressed through the responses of my esteemed panelists here. But again, just to close that point, and here is a question that is anonymous. What do you think is needed with all that to attract more FDI, which has not much increased? Well, I should say it's not even there. We can't even say it's much increased, despite the currency devaluation. Any thoughts on that? And let's just keep the answers very short, because we're already over time. But I look at my colleague Wafa here, and we'll take like a few minutes more. So we want to get as much as possible of the questions before we wrap up. Anybody wants to take this one?
Okay, I agree. I mean, depreciation. Is it working? Yeah. Okay, depreciation has made $1 million equals almost 60 million Egyptian pound, which is supposed to be a very good tool to invite the foreign direct investment, because investors are going to invest while the currency is depreciated and then reap the profit and go out, or reinvest when the currency is appreciated. So that should be beside actually attracting investment. I'll add another point and then I'll answer. The other point is that also we have a high return on investment, because we have a cost of capital that is higher than other countries. So again, this should also invite investors to come and make the investment. But investors, as you know, not only these factors. I mean, when we look at the factors, other things are not kept held constant. There are other dynamics. Part of that dynamics are the risk, at the same time, the expectation. And those two elements, actually, they based on the perception of the foreign direct investment, perception of the country. And as long as they don't see that the domestic private sector is engaging, or they hear that there are problems for the domestic private sector, they're afraid to come and make the investment as foreign direct investment. again, we are aware of that, and we are measuring that, and we're looking at that. The foreign direct investment is going to come when the infrastructure for the investment, and I mean by that the law, the regulations, the playing fields, the challenges that are there, they are fixed. And we're doing this simultaneously. We're fixing that, and we're inviting the FDI and the foreign direct investment to come, because we believe that we have that now we are ready to invite the FDIs to come and make investment. But it is taking time. I agree, it's taking time. There are risks. Yes, there are risks. There are challenges. Yes, there are challenges. But again, simultaneously working with the playing field plus the ecosystem or the sentiment for the investment is really important, because it's not a matter of incentives. And before the session, actually, I was talking to my colleagues that I read so many reports that are evaluating the incentives, either in the investment law or the incentives that are given by the Ministry of Finance in terms of taxes and so on. The incentives that Egypt is giving is not really law. I mean, compared to other countries, we have very good incentives, but still we are being not able to attract the investments. It's not lack of investment, it's not lack of incentives, I'm sorry, but it's, again, the sentiment itself and the ecosystem. But we believe that with the work we're doing and with engaging and crowding in the private sector, the FDI will come.
Any other quick reactions?
Comment, you know, there is an appetite. There is an appetite that we have been witnessing over the last year, that somehow everybody seems to be positive about Egypt. You know, we're hearing that from financial institutions, you know, and for whatever reason that is, strategically or economically, you know. But the whole idea is that how to capitalize on this appetite, you know. Clarity, I think the presentations, the three of them, you know, or the narrative is clearly addresses this question, yeah, Dr. Sherif. But there are two issues that we have to be clear about. The government agencies have to be on the same page. We're still not exactly on the same page. And then you could find positive initiatives that are counteracted immediately by negative ones at the same time. You know, this kind of coordination. When we talk about crowding out, we have to be clear about the definition of crowding out. Who is crowding out what? So when we say state-owned enterprises, this means everybody, including the military establishment. We cannot exclude that. If the military is going to be there, there has to be clarity on what they will be in. Fine, nobody's contesting that. But this clarity is also very much needed, you know. Bureaucracy, at the end of the day, I'll just give you three examples. Land allocation is still an issue. We have all the land in the world, but there is no clarity on how to allocate the land, and it's a very cumbersome process. Number two, tax code. Number three is clearance and trade across borders, you know. Once you address these issues, you know, I think you will unlock the potential of the economy at large.
Thank you. We need to wrap up in a few minutes, so please keep your answers as short as possible. I'll go to Dr. Bakhache, and that's a question I think relates to the last couple of minutes when you addressed the macro overview, and it's a question from Basel Rushdie. How do you evaluate the external debt burden of Egypt and its capacity to borrow and repay its debt and interest?
Thank you so much. Just quickly to say that when we look at the debt of the government, the public debt, we look at public debt from its very different sides. And external debt is only one part of the overall debt position of Egypt. Now, when we look at the entire space of debt, we consider that debt in Egypt to be sustainable, but there are important risks, and these are risks that the government is dealing with. So, number one, the debt level, of course, the debt level is sustainable, but it is high, and it needs to be brought down. And actually, if you look over the past several years, except for the last year, the COVID period, we've seen a decline. And therefore, as I mentioned, it's important to bring it back down on the declining path. The number two area that present risks includes the high financing needs of the government. So if you look at the entire government and you you consider how much financing the government needs every year, it is very high. It is more than 35% of GDP. So every year the government has to bring this much resources to finance itself. Now, of course, again, we see a lot of progress that the government is doing to kind of manage and reduce this gross financing needs, including extending the maturity of the debt. Historically, Egypt, I mean, over the past several years, Egypt had relied a lot on short-term debt. Now we're seeing more longer-term debt being issued. Now, on the external debt, you know, the external debt of Egypt, of the external part of public debt is not that large. It's about 20%. So yes, it is not low, but it is not large. And again, it's a diversified external debt portfolio. You know, this is debt with international partners. This is Eurobonds, this is Sukuk. So it is a fairly diversified portfolio that, you know, we think, again, it is sustainable, but again, it needs to be monitored closely. Thank you.
Thank you. I'll go to Dr. Gehan, and I firmly believe you answered that, but again, just to address it maybe in a bullet format, how can we expand the level of private-public partnership in Egypt? How can we expand the level of private-public partnership in Egypt?
Yeah, again, actually, that's a very important question. And in the coming period where this policy or this doctrine or this document that the government is going to announce is going to put it very clear how this is going to be expanded and how the playing field is going to look like. Because again, with this gap between the saving and the investment, it can't be done just by the government. Definitely, it can't be sustainable just by the government. We need the private sector to be there, either with the PPP or any other type of collaboration and investment, but it has to be there. Again, the government, it's not a luxury that we step out. It is a must, because this gap between the saving and the investment, it won't be able to be filled by the government, because again, it can't be by the external debt. Yep. It is not sustainable, and it is a must that it will come.
Thank you. Tarek, let me go to you. Based on the fact that you are a board member of the Sovereign Fund, the question here is, what are the indicators based on which state-owned enterprises will be sort of privatized? So which sector are the priority that are going to stay and which are going to be privatized, if you have the answer for that?
As a sovereign wealth fund, I don't have the answer, you know, but I mean, as a government program that will be announced, you know, and I have to admit, you know, the government reform program has been very closely engaged. We have been very closely engaged in it, to the credit of the government. And I have to say that the steps that are taken, you know, to a great extent has been clearly taken from a lot of recommendations from the private sector. And I think it will be spelled out. But I want to mention three very important issues. First of all, you know, the president announcing that 10 military economic establishments will be spun off. It's a game changer, unprecedented. So, I mean, and I know that there are, with the Sovereign Wealth Fund, there are 2 that are already being packaged legally. So that's the first one. The second thing is the amendment and the reform of the public sector law. This is also a political turnaround, you know. And if you look at the details of this law, and it just opens the stage, opens the cap on privatization at large, which was not possible legally before, you know. So, I mean, this is a legal framework that will open the door. The third one is the amendment of the PPP law. And again, you know, I think it's still in debate right now, and it's being massaged and ironed out to open up the door for more aggressive private sector inclusion. These are 3 pillars upon which I think I would feel very positive, you know, in the coming year to see what will happen with it, you know.
Thank you. I think this is, again, a question actually directly to you, and I think it was picked from one of the slides, proposing government managing investments rather than sectors. And the question is, can you please dwell on that a bit more?
Well, I mean, Dr. Gehan, would you like to comment? But I will comment quickly, you know. I mean, the whole idea is that the government invests money in any economy. And I think the plan that has been done, you know, is benchmarking to best practices worldwide, including the, you know, the experience of China, Malaysia, even in the United States. Everybody is putting investments, but the whole idea is to invest the money and separate ownership from management. This is the game changer. If this happens, I think there will be a major transformation on the economy, because there will be accountability. And then the privileges that the public sector is getting, you know, like Dr. Saeed mentioned, will not be there anymore. I think this in itself, you know, can change the whole dynamics of the game.
Yep. Question to Dr. Gehan. What is the government's stand on outsourcing, not only in the ICT sector, but in other sectors as well? And how is the government preparing the growing labor force to acquire the skills needed in a sort of digitalized, increasingly digitalized environment? And I believe that will be the last question.
Digitalization is very important, and digitalization actually is now the key in everything. And so many problems of bureaucracy and so many problems of transparency and accountability, they are based on digitalization and availability of information. And that's why, with the steps of this heavy investment in the ICT sector and the digitalization, we are going to come to the stage of the outsourcing, whether outsourcing on Egypt or outsourcing on other countries, to be efficient, because we can't sustain with high cost. We can't sustain without being able to be competitive. So for sure, the outsourcing either on Egypt or we outsource outside is going to be there, as long as we want to make it sustainable for the ICT sector and for the digitalization.
Thank you. Well, I can let this one go. It just came in, and it's directly to Dr. Saeed. It's an interesting one. How do you see the Egyptian pound performance in 2022? How do you see the Egyptian pound performance in 2022?
In 2022?
Yep.
Yeah. Let me tell you how this issue is kind of discussed in our engagement with the authorities. I think you may recall back in 2016-17, a big reform, I think it was mentioned, was the floating of the exchange rate to eliminate the imbalances and really make sure that all transactions happen on the market, not on the black market, on the official market, not on the black market. In the process, we've seen the exchange rate overshoot at some point, and then inflation go up with it. And then, as was expected, we've seen a kind of a recovery, for the lack of a better word, in the exchange rate. And in fact, inflation continuously went down to where it is today. So during the COVID crisis, we've seen a decision really by the central bank to maintain the exchange rate, to really ensure that the exchange rate remains stable in the face of this massive, really it was a massive shock that affected not only Egypt but the entire world. And the rationale at that point in time was that there was no amount of exchange rate volatility really that could deal or reduce the effect of this uncertainty on the Egyptian economy. And at the time, as the IMF, we understood this policy, and we actually, you may recall, we had 2 programs that supported the authorities' efforts at the time. Now, since then, we've seen it at some point it depreciated slightly, and then after that it remained fixed. One thing we can say is that there has been no intervention by the central bank in the FX market. Of course, moving forward, our advice to the authorities, to the central bank, to whoever listens really, is to ensure that the flexibility that was introduced back in 2016 and 2017 to be the policy framework and to make sure that monetary policy is anchored, and I mentioned this actually when I spoke, is anchored on price stability, on the inflation target that was set by the central bank, the 7% plus or minus 2 on both sides. And allow, again, the exchange flexibility to be there to help absorb shocks that the Egyptian economy will face. I mean, it could be positive shocks, it could be negative shocks. The point is to allow an upward and downward flexibility in the exchange rate so that we can absorb these shocks. Of course, you know, to be sure, you know, the shock of 2020 was a massive shock, and we understood that at the time it was reasonable to aim for stability in the exchange market. Now, moving forward, you know, all economies will continue to face many shocks as they go forward, and therefore exchange rate flexibility is important in this regard. Thank you.
Thank you, and I believe it's the only constant thing moving forward. Final thoughts, 30 seconds each. I will start with Tarek. 30 seconds.
Well, I mean, I just want to mention, you know, we don't have an import problem. We have an export problem. Imports are only 28% of GDP, yet we have a trade deficit. Vietnam has, you know, 103% of GDP, yet they have a trade balance. So this notion of import substitution, I think, is a very wrong message, you know, that we have to get out of the system. And this narrative has to be erased from the government altogether. Without foreign trade and exchange of trade, you cannot grow, you cannot have FDI, you cannot have investments.
Absolutely. Dr. Gehan?
Totally agree, of course, with Mr. Tara, and I guess I mentioned that. I mean, import substitution is a very old policy in the 50s that is not, again, being touched, but again, the value chain, remaining on the value chain, looking at how to make it to be strategically aligned with the neighbor countries, with the investment being a hub, and again, using the resources in a more competitive, sustainable way is the key issue. Flexibility of the exchange rates, this is the reform that we have done, and we are persistent with it, and definitely we want to keep it. Investment, again, is the game changer, or the most important pillar in the sustainability, and the empowerment of the private sector is a crucial part of the structural reform program that we are persistent to make it happen.
Thank you. Dr. Bakhache? 30 seconds.
So, absolutely agree with on the import side. In fact, I'll take a step forward and say and remind that in our recommendations and discussions with the Egyptian authorities, we often talk about removing restrictions on imports. And the reason we say this is because we think imports are absolutely necessary to export. You know, it's about value, adding value to imports. So, so this is one thought. The second thought, I want to go back to the first question that was asked on FDI. What is it that's needed to attract FDI? I think the perhaps better question is what's needed to attract private investment in general, including FDI, reduce uncertainty. You know, the investment is already sufficiently uncertain. In Egypt, there are additional uncertainties associated with investment, including because of all the reasons that we mentioned here, leveling the playing field, make sure that investors know that they will not face unfair competition when they enter into a certain sector. These are the kind of the last thoughts that I would like to share.
Thank you. Tarek, final thought?
You know, I mean, when we talk about FDI, I'm not talking about the billions of money coming from big companies. FDI should come from small and medium-sized companies. When the environment of business is conducive to attract them, then I'm comfortable that FDI will flow. Big companies can handle their problems in the country. Small are run away from the problems. And this is where the technology transfer, this is where job creation, where the skill level is going to come. Without having those, you know, we're going to be stagnant.
Absolutely. We've heard from the private sector, we've heard from the IFIs, we've heard from the government, and I think the discussions and the points that were raised are all aligned. It's now moving into real actions on the ground. I would deduct from what has been said over the past just under 90 minutes, and that's based on what they said, for the economy actually to reach its true potential. For me, it's a matrix that would include the fact that it has to be an environment that is government-led, enabled, private sector-led, innovation-driven, and given the demographics we have, it has to be youth-empowered, especially to Tarek's point on micro and small, medium-sized enterprises. And finally, given all the changes that Dr. Bakhache alluded to and Dr. Gehan, future-oriented. With that, thank you very much for joining us today. Please put your hands together to our panelists. We'll have a short break and then we'll proceed with the second panel. Please be well and stay safe.